September 3rd, 2024. So today was essentially a failed parabolic wedge and then a small pullback bear trend day. And you can see we only got above the moving average one time today, which is pretty rare. Usually, even on the relatively strong small pullback bear trend days, you end up touching the moving average a couple of times. So this is a really strong small pullback bear trend day. And as I mentioned in my earlier video, a lot of times when you do get those small pullback bear trend days, they form in legs. So you get a first leg down that lasts generally the first 18 to 23, 24 bars. And then you go sideways till around bar 40, or 38 to 40 is usually the window for the midday reversal. In this case, it could be midday trend continuation, and then you can see you get a second leg down. So we got a big gap down to start the day. I use the SPY for days like this when the prior day was a half day. I prefer to use the SPY because then I don't have to worry about the moving average being different. So I personally do that. But coming into the day, something to pay attention to, I thought, was the 30-minute chart. On the 30-minute chart, we had four really climactic bull bars, you can see. And while we did get a pretty deep pullback to the open of the day, or around the open of the day, it was around a 50% pullback. So I actually thought the odds favored that even if we went down a little bit, we were going to bounce and get some sort of second leg up from this. Obviously, that's not what ended up happening, but I thought it was more likely than not that if we did start to sell off, it would become a minor reversal. And a lot of times when you do get small pullback bear trend days, like we did today, they come in spots where you would be expecting a minor reversal, and then the market just keeps going. So that's the thing. That's how small pullback bear trend days happen. Is they're in spots. They usually happen in spots where it's not very likely that you're going to get a big small pullback bear trend day. However, the market just keeps working its way lower. Buy setups keep failing, and you continue to get lower highs and lower lows. And another big sign of a bear trend or a possible small pullback bear trend, the biggest hint in my mind that there can be is two open gaps. So you can see we had an open gap with the 1 low in the 3 high, and we had an open gap with 7 low and the 8 high. Sorry, the 5 low and the 8 high. And in general, if it's going to be a small pullback bear trend day, this second gap will not close. Obviously, the first gap won't close too if the second one doesn't. But I think when you start to get the pullback, it's important to pay a lot of attention to this, because if this gap had filled in during this rally, that would have decreased the chances of any sort of trend for the bears. Bar 1, a bear bar, but a tail on the top and a tail on the bottom. So really not as good as it could be. In general, any day, there's a 20% chance of some sort of bull or bear trend from the open. And there's a 20% chance that bar 1 is either the high or the low of the day. So once we traded below bar 1, there was a 20% chance that we had seen the high of the day. Now, the only context in which that can be changed to a higher probability would be a big gap down and a big good-looking bull bar closing near its high, or a big gap up and a good-looking bear bar closing near its low. In a lot of those cases, the market can shift to more of a 30% chance rather than a 20% chance. But anyways, bar 1, a big tail on the top, as well as a tail on the bottom. For the bears, they have the big gap down, and they see bar 1 as follow-through. So to them, they see big gap down, yes, and follow through bar 1, maybe some sort of spike pullback channel. So the gap has started up here, then went down to here. So maybe they're looking for a measure move down into this area. You know that bar 1, sorry, this is a pretty large day. How much was it? 112? Okay. So interesting day, a little over 2% loss. But anyways, bar 1, big tail on the top and a tail on the bottom. Bears see it as follow through from the big gap, so we are probably always in short. However, it's really not all that great yet. I think the bears need to do more to convince traders that we're going to go a lot lower. Bar 2, consecutive bear bars, good for the bears. We're probably going at least a little bit lower. And you can imagine that from bars 1 and 2, even if we start to rally, we might end up getting some sort of second leg down. I think bar 3 was a disappointing bar for the bulls. The bears, they have a bear trend, the gap down, and then bars 1 and 2, and bar 3 is the pullback. However, the bulls were hoping that bar 1 and 2 end up being a bear trap, and bar 3 is a reversal and a possible low of the day. However, if that was going to be the case, bar 3 probably would have been a much nicer bar. It probably would have closed on or near its high and gotten a good follow-through bar. And even if it doesn't get, or even if it does close the way it did, like bar 3. There's still a chance that it's the low of the day. Obviously, it's decreased, but now what the bulls want to see after bar 3 is a bar like bar 33 today. So if you get 3, if you were looking to buy and take a chance that we had seen the low of the day on bar 3, and that 1 and 2 was going to be a bear trap, you were disappointed with how 3 closed, you could wait and see if you could get one more follow through bar, a good looking bull bar closing near its high, something like bar 33. But obviously, that never ended up happening. Bar 4, a bear bar, but a tail on the bottom. So really not as great as it could be. And it fails to close below the bar 3 low. So we're failing to break out below the bar 3 low. However, it is a reasonably tight channel down from bar 1 to bar 4. And obviously, we have now formed an open gap with the bar 1 low and the bar 3 high. The meaning of the open gap is you have to think about the limit order bears, the limit order bulls. So the bulls who bought below 1, they scaled in maybe 5 points lower during bar 3, and they were never able to get out of their first trade with a profit and their second trade at their first trade around break even and their second trade with a profit. So buying below bar 1, not a necessarily good limit order trade, but you shouldn't lose money buying below bar 1, and we should get back to the bar 1 low at some point today. So if you had bought below bar 1 just on the premise that we would probably get back to the bar 1 low at some point today, and you should be able to scale in lower and make money, you should have been able to make money doing that. However, this was a special situation where the gap stayed open, bar 3, and ended up staying open all day. And that managed to trap in a lot of those bulls, the limit order bulls, and the market made the market channel a lot lower. So 4, a bear bar, but a big tail tail on the bottom. So really not as good as it could be. And then 5, another bear bar, but a little bit climactic, I think. Again, a big tail on the bottom. The bulls are hoping it's a second leg trap. Something to notice is there's not really tails on the tops of these bars for the most part. So traders were pretty content with selling the open of the bar. A lot of them were scalping towards the lows of the bars, but traders were pretty aggressive with selling the opens of the bars all day. So a little bit of a sign of strength from the bears here, the fact that the bulls couldn't really put much for tails on the tops of the bars. So 5, a big bear bar, but I think it's climactic. We have a channel from bars 1 to bar 4, and then a really climactic breakout below it on bar 5. So am I selling below bar 5? Probably not. Some traders can sell the close. We are always in short. So I didn't think there was a lot of good stop order sells today. I thought most of them were difficult. However, you have to keep in mind that if it is always in short, it is reasonable to just sell below bear bar closing near its low. So while I personally am not going to take shorts like sell to close 5, sell below bar 4, it's not theoretically unreasonable to do so with probably a stop above the high of the day and taking a chance that we have seen the high of the day and that we are in fact going to get a big bear trend day. But the problem with that is the probability is not all that great of a big bear trend day, and your risk is large. So if you did do that, you have to try and really make it count on days like this and cash in and try to be exiting somewhere down here. 6, a bull bar, but a tail on the top. I thought the tail was disappointing. I thought if 3 had closed on its high, it was a credible low of the day. And if 6 had closed on its high, that was also a credible low of the day. However, it did not close on its high on 3, and it did not close on its high on 6. So we have 2 failures to get a strong reversal up, bars 3 and bar 6. So I think that's a bit concerning for the bulls. Sometimes what will happen is when the market tries to create two valid signals and it fails, you get a breakout below, and the breakout becomes a measuring gap. So again, a lot of times when the market tries to create 2 signals that would be valid and it fails both times, you end up getting a measuring gap, and that becomes a measured move down. And that's exactly where we went to. You could argue the center of the measuring gap. So the center of the gap would be the measurement. So the center of the gap between the 5 low and the 8 high was actually where we went to here. So this was a measuring gap, in fact. So bar 7, I think a lot of bulls who bought the close of 6 are disappointed that who bought during 6 trying to front run the buy, are most likely disappointed in the fact that bar 6 was unable to close on its high. So a lot of them are going to be exiting. Bears, they might exit above 6. So they'll sell more on their position with a very small amount of risk, taking a chance that we're going to collapse. It could be a parabolic wedge, 1, 2, pull back 3, 4, 5, pull back 6, and then collapse down on 7. However, something to keep in mind is that we have 7 straight, a 7-bar bear micro channel. So we've been channeling down for 7 bars, and we haven't traded above another bar yet today. I think that's really disappointing for the bulls. They're hoping to trade above another bar rather soon. However, even if it is a parabolic wedge, you know that 7 is, first off, the most recent sell climax high would be 7. So one of the targets for the bulls, had we gotten some sort of good reversal, would be the 5 low, the open gap we get here, and then the bar 7 high, the sell climax high. 8, a reversal attempt. So I think 7, the bulls see parabolic wedge, the bears see breakout below, and they're hoping to reset the market cycle and get a spike and a channel. You know that 7 is strong enough for 2 legs down. It might be strong enough for 3 legs down, which is what we got. So 7 ended up resetting the market cycle. Instead of being a parabolic wedge, it reset the market cycle, and it got 1, 2, 3 legs down. Bar 8, a bull bar, but again, unable to close near its high. So this is pretty disappointing for the bulls. Anytime they're trying to get some sort of reversal up, 7 would have, or 8 would have been a parabolic wedge for the bulls had it closed on its high. But anytime they're trying to get some sort of reasonably valid reversal up, the bears are selling into the close, and they're not. They continue to put tails on tops of the bar. So tail on 3, tail on 6, tail on 8. So I think this is really rather disappointing for the bulls. 9, a big bear bar closing near its low. It could be a 4-push parabolic wedge. So 1, pull back 2, pull back 3, pull back 4. Parabolic wedges do sometimes have 4 pushes. However, I'm not really interested in buying a reversal up until we start to go a little bit more sideways first. The first reversal up is going to fail. It's going to be minor. Why? Because we have 9 bars without trading above another bar. However, do you want to sell the close of 9? I don't know. I mean, if you're selling down here, you have to keep in mind, we got big bear bar, pause bar, big bear bar, pause bar. Now we have big bear bar. So what do you think we're going to get? We're probably going to get a pause bar. That's exactly what happened on bar 10. Bar 10, the bears see another pullback, so they're hoping this pattern continues and we get another big bear bar and do not trade above bar 10. And the bulls are hoping that it's a parabolic wedge, we trigger above. They know we might go a little more sideways first, but I think the thing everyone is paying attention to is this gap. So are we going to go sideways and they're going to get some sort of lower low or higher low major trend reversal and reverse up into this area? Or are we going to get, basically continue to go sideways and then get a big second leg down? So those are pretty much the 2 options for the second swing we might get today. 10, a bull bar closing reasonably near its high, but not worth taking, better to wait. Disappointment, 11, a doji bar. If you bought above 10, you did not want to see a doji bar. And 11, you wanted to see a big follow-through bar. The bulls were more interested in buying a 50% pullback in bar 10 than they were directly above the bar anyways during 11. You can see we tried to pull back to the bar 9 high, the most recent sell climax high. 12, another doji bar. So we have consecutive doji bars, 11 and 12. 10, a reversal up, doji bar 11, doji bar 12. How much higher are we going? I don't know. Probably not very much. I mean, this is a minor reversal. It's important that we got 3 straight bull bars because this is going to be a magnet. So we might have to bounce back up to the area of the 12 high or the 12 close like we did during 26. 26 was also trying to test the bar 13 sell climax high. However, it ended up just becoming a minor reversal and was not able to get up into that area. So 13, a big bear bar closing reasonably near its low, but after 3 straight bull bars and all these reversals, I don't really want to sell below 13. 14, an inside bar, a low 1 short for the bears. Am I selling below 14? You could take the short. I didn't mark anything in this opening range because I didn't think there was any obvious swing trades. I thought everything was relatively marginal. And I don't like to take trades that are marginal. I like to take the best 1 or 2 trades a day. 15, another bear bar. So 14, 15, 13, 14, 15, 3 consecutive bear bars after 3 consecutive bull bars. The bears want the bulls who bought for any reason during the gaps. So bulls who bought below 1 and bulls who bought below 6 or 5. Bears want all of those bulls to give up and get a give up part of the downside. And basically the bulls admit that they're trapped. And that might be what 16 is, a bit of a give up bar from the bulls. However, I'm not selling down here. I think we're going to end up going a lot more sideways. It's really not very good to be selling this far below the moving average. And this climactic move. 17, a doji bar. So if you sold the close of 16, do you like the fact that 17 looks like it's the way it does? Do you want to see a doji bar if you sell below 16? No, it's the literal bare minimum follow through that traders can get if they sold below 16 is a doji bar as follow through. I think if you're going to take the short like 16, you wanted a big follow through bar and a lot more from the bulls or from the bears. Instead, you got this. So really not all that great. 18, a low 1 short for the bears, but it's a bull bar. So if you sold 16, you got disappointing follow through doji bar on 17. If you gave it 1 more bar, hoping that 18 was going to look like 16, you ended up getting 18, a disappointing low 1 short, ended up being a bull bar. So bears, they know we're overdone, but it's a game of musical chairs at this point, right? The bears are waiting to start to get a bull bar, and they're all going to exit. And a lot of the bears ended up exiting below 18 since it's around the bar 16 low, where some of them sold and maybe scaled in or just exited around break even, deciding to give up and wait for a couple legs sideways to up before selling again. And that's a big piece of what's causing bar 19 here. It's bears giving up. So to me, this is the bear give up bar, and now we're going to get a pullback. So the question becomes, what does the pullback look like, and how deep does it go? If it just rolls or just moves up to the bar 13 sell climax high, that's completely fine. That's a reasonable area for the market to reverse back down. But you really don't want to see it. This is if you're a bear. You don't want to see a strong move up into the gap of the bar 5 low and the bar 8 high. That would be really, really disappointing because that would decrease your odds of a bear trend day. So if a lot of the bears are giving up and that's causing bar 19, what do the bulls need to see to buy? Well, you probably need a really, really good looking follow through bar on 20, and it doesn't look like you're going to get it. You end up getting a doji bar. I think that's disappointing. The bulls were hoping that the bears would give up 18, 19, or 19, 20 and get consecutive bull bars closing near their highs, and then they could buy, looking for some sort of swing up. However, instead, what do you get? You get bar 19, or you get bar 20, basically a doji bar, minimum follow through. It's true. So it's if the bears see a low 2 short, the low 1 short below 18, and 20 would be the low 2 short. It's true there's probably buyers below. So you have to realize there's going to be buyers below 20, scaling lower. We do have a small open gap with the 18 high and the 20 low, but you have to be expecting that to close. You can see 20 rallied up to around the bar 12 low, where the bulls who bought below 12 and scaled in lower made money. So now we're in a trading range because the bulls are making money on limit orders. 21, an inside bar. It's a low 2 short for the bears, but we've had 5 bars without a bear close. So do you want to sell the low 2 below 21 when we've had 5 bars without a bear close? No, probably not. There's probably more buyers below 21, if anything. You can see we get buyers below 21 during 22. It's an outside down bar. Bears want low 2 follow through, but I think it's too soon. When you have a bar like a sell off for the first 18 to 20 bars, I probably want to see a 10 to 15 bar pullback here. So I'm not really willing to sell, even if 22 is able to close on or near its low. I'd rather wait for a pullback and for us to start to go lower again. And that is assuming we keep the gap open, which is looking like we're going to. If we weren't going to keep the gap open with the 5 low and the 8 high, these bars would be a lot stronger for the bulls. An inside bar 23, a low 1 short for the bears, probably more sellers above and probably more buyers below. Do you want to take this, for anything? No, probably not. Some bears will sell above it and scale in higher. That's probably a reasonable thing to do, but it's really not worth doing anything. 24, a bull bar, but a large tail on the top. So I don't know, not really worth doing anything. Probably buyers below, probably sellers above. We're in a tight trading range since 19. So 19 was the bear give up bar. And since bar 20 to bar 25, we have really just gone sideways and not done much else. So for me, I'm probably just going to wait until we get something more clear. So buyers below 24 during 25, tight trading range, reasonable to think there'd be buyers below, but do you want to buy above 25, a doji bar, high in a tight trading range? No, probably not the best idea. So we can see we get disappointing follow through 26. We rallied to the moving average and then sold off. Probably buyers not too far below 26. However, it's a third reversal down, 18, 21, and 26. They're all bull bars, so it's not good to sell, but it's a little bit it's a little bit worse to be buying below bar 26 since it doesn't close above its midpoint, and it's clearly a failure from the moving average. So it's really not all that great. 27, let me get a sip of water. 27, a bear bar, but a tail on the bottom. Again, not what you wanted. I think if I was a bear, I wanted a better looking bear bar. And this, to me, I think the bulls who buy below 26 are going to end up making money. This is a wedge, but I don't know. It's really not all that great. 28, an inside bar, a low 1 short. Am I selling below 28? I probably would not. I'd probably rather wait. The bears see a low 1 short, but it's a bull bar. So to me, it's still sideways. Again, you're looking for one of two things to happen. For the bulls to start to get a rally and get a close above the moving average, and then a pullback and some sort of higher low major trend reversal, or you're looking for trend resumption down around the middle of the day. Buyers below 28 during 29. High 1 buy for the bulls, or I suppose you could say a big high 2 buy for the bulls. The first high 1 being probably bar 23, and then a high 2 being bar 29. But no one wants to take that. I think you're just trading in the middle of a tight trading range if you're buying. 30, an outside down bar, but no one wants to sell. It's probably just better to wait. Again, what's important to realize here is this is tight trading range price action, so you don't really want to do anything. And we haven't been above the moving average yet today, so I am unwilling to buy regardless until we get a close above the moving average. 31, a bull bar, but sellers above 30 during 31, most likely. 32, an outside down bar. 27, 30, and 32. So possible wedge pullback, but I don't know. Am I selling below 32? It seems like you're selling a third leg down in what might end up being a trading range. It is definitely possible that this is the start of the trend resumption, but again, this is possibly still a trading range. We got 1, 2, 3 pushes up, and now we might have 1, 2, 3 pushes down. 33, a reversal up for the bulls, but if you're buying above 33, you're buying the exact middle of this trading range. Not good. You're also buying the top of this tight trading range. Not good. And you're buying below the moving average when we have not had a single bar close above the moving average yet today. We've only had one bar get to it and it sold off immediately. Not good. So 33 is not a good trade. The bar is good, and initially the placement can seem okay, but the more you think about it, the more you realize it's not a very good trade. Disappointment 34. So a big tail on the top. You can see traders sold more so than bought at the moving average. So anyone who bought above 33 scalped really quickly. I don't know if they made 5 points. So it was a 21 tick trap. So the bulls who bought above 33, the market needed to go one more tick above the high of where it went in order for those bulls to make 5 points. And it was not able to do that. 35, bear bar closing near its low. It's good for the bears. We're probably going at least a little bit lower. However, I'm not sure, or it's a swing trade to sell below 35. I would put a stop above 26, and you're taking a chance basically that we're going to run the stop below 33. You get some, excuse me, you get some sort of breakout below. So it's reasonable to sell below 35 for a swing. Another failure at the moving average. 36, follow through. The bulls, they want a double bottom, basically an exact double bottom, 33, 36. However, it's a bear bar. No one wants to sell, or no one wants to buy above it. Probably sellers above. 37, an inside bar for the bears. So it's a low one short from the sell on 35. I think if you're short in this area, it's, you're looking for a bull give up bar. So you're basically waiting to see if we can start to get a bar like bar 49 and then sell off for some sort of measured move. But you can see we ended up going a little bit more sideways here. So 38, a doji bar, pretty disappointing. Still always in short, still probably going at least a little bit lower. But why are we getting a doji bar? It's really not all that great. 39, you can see probably buyers somewhere down here, but I'm not willing to buy anything. To me, it's always in short. We're getting bear bars, so we might just channel down. 40, the bulls want a midday reversal, a lower low major trend reversal from bar 17, but it's not a good trade. It's a bear bar. We're in a bear micro channel. We've had 5 bars without a bull close, and the 6th bar back 34 did not close below its midpoint. We're always in short. We haven't closed above the moving average. There's sellers above. Doji bar 41, disappointing. Again, the bulls want some sort of higher low major trend reversal or lower low major trend reversal to occur here. And the bears are hoping that we're going to end up getting a bull give up bar. 42, a bear bar. But again, we're getting a lot of dojis. Doji 38, doji 41. So it's possible we got 3 bars to 37, pullback, 39, 40, pullback, and then 42. So it might be some sort of wedge. 43, a bull bar. I think a lot of bears will get out above 43. It's a bit disappointing. If I was short, I was short, but for anyone who's short, it makes sense to get out above 43 and wait for a couple legs sideways up before looking to sell it. Yes, we're still always in short. Do you have to get out above 43? I suppose you can always just keep your stop above 34 and move it. Bet on a lower high and just move it with that. That's a reasonable thing to do as well. 44, because you're taking a chance that we sell off the first time we get a close above the moving average, which we did on 47 and we did on 48, 49. So 44, another bull bar rallying towards the moving average, but sellers around the moving average, not great. Again, we're going to sell off the first time we touch the moving average. Buyers below 44 during 45, probably going to get another leg up. Executive bull bars 43, 44, but again, probably buyers below scaling it lower. With the bears, you really don't want to sell below 45. I think after 43, 44, we were most likely about to touch the moving average. 46, the bulls, lower low double bottom with 43, possibly lower low major trend reversal. But you can take it, but it might end up becoming a minor reversal because there's going to be seller to touch the moving average for the first time. So as good as 47 looks, consecutive bull bars, 46, 47, but it's also a possible wedge, 41, 44, 47. So might not be quite as good as you think it is. 48, an inside bar, a low one short, or a low two short for the Bears. If you sell below 48, you probably can, but small risk, taking a chance that we start to get some sort of sell off. But I would just rather wait. We're still always in short though. I don't think we've ever became always in long. 47 was trying to make the market always in long, but obviously failed during 48. 49, a big bear bar. So probably again, the Bears, the Bulls now have their close above the moving average, and so they want some sort of lower low major trend reversal or high low major trend reversal. But I don't know what the odds are that they get it. So 49, a huge bear bar closing with its low. We're clearly always in short. If we weren't before, we're back to always in short. And then 50, a bull bar, but a tail on the top, probably sellers around the moving average. Again, the bulls want a higher low major trend reversal, but it's closing right at the moving average, reasonably big risk on a bear trend day. So probably better to wait for one more bar. You know that the Bears will exit above 50 though if we trade above it, and you can see they sell the close, trying not to let it trigger, and that's what causes 51. 52, an inside bar, so a low one short for the Bears, but it's a bull close, so not sure how much you want to sell below 52. Another inside bar, 53. So an II pattern this late in the bear trend is very possibly a final flag. However, it's probably better to just wait if you get a bear bar closing near its low, 54, and you can sell below 54. If 55 is a bull bar closing near its high, you just get out. No big deal. If you sell below 54, which is reasonable to do, it's a breakout below a possible final flag, but it could lead to a measuring gap since this is a small pullback bear trend day. So you can sell below 54 and put a stop above 52. I think that's a reasonable thing to do. And then if you get any sort of bull bar closing near its high on 55, you just exit the trade. Instead, you get a bit of a collapse on bar 55 and another open gap with the 54 low and the 56 high. It ended up being an open gap with we have a gap with the 51 low and the 55 high here. So this is an open gap. This is an open gap. So we ended up having a lot of open gaps today. And only one closed above the moving average. So 54, a bear bar closing near its low, reasonable sell to close bar. 55, a collapse down, possibly some profit taking here, but possibly another spike pullback channel. So spike 54, 55, 56, pullback 57, and then channel down to 72. Final flag 66 through 71. So we're probably going to come back to that tight trading range later in the day. So even though we got a strong breakout below 73, 74, you have to realize we're probably coming back into that area like we did at the end of the day and roughly where we closed. So where was I? 56, an inside bar, a low one short for the Bears. Again, still a possible pullback, so we might start a channel phase here. But you could look at it as the spike and low one short. An inside pattern, 56, 57, so a couple of IIs here. Reasonably short, always in short. 58, a big bear bar, or a bear bar, but closing near its low, but it's pretty, we're pretty overdone here. So it's kind of tough to want to short. You definitely can take the short, taking a chance we get some sort of measure move down of the parabolic wedge. Somewhere down here, something like that. But I don't think it's all that ideal, but it's a swing trade for sure if you do take it. Disappointment 59 is not surprising. If you do sell below 58, stop is probably above 54, or you could say 52, the high of the spike. And then 60, an inside bar, a low one short for the Bears. But is it worth selling below 60? I don't know. It's kind of tough. It could be, low one, or could have been spike 54, 55, pullback 56. So that's the first push, pause 57, second push 58, pause 59, third push 60. So that's possible as well. Outside up 61, possibly Bears taking profits, but still no true bottom in sight. 62, an inside bar, a low one short for the Bears, closing reasonably near its low, but I would not sell that. It's an IOI pattern, 60, 61, 62, a possible final flag. The market forms final flags all day on bear trend days like this, but most of them end up being useless, obviously, until the final one, which we got in the tight trading range. One of the reasons, if Al marks the buy above 76 reasonable tomorrow on his chart, I'll check if he does. It's probably because he's talking about buying and trying to get back into the area of that final flag, 66 through 71. which was a reasonable magnet above. 63 follow through consecutive bear bars closing reasonably near their lows, but there's no real reason. Or you can be short. It's always in short, so it's okay to sell, close 63, 64, 65 if you would like to, but you also have to keep in mind, it's probably not going to go all that much further. I think that this is probably a bit overdone, and then we get the final flag. The tight trading range starts 67, 68, 69, 70. And then you can see 72, 73, you could sell for a breakup below the final flag, but you get good follow through, make a quick 20 points. I would just get out of the trade. And then we get a big reversal up 76. Some traders might buy above 76, trying to get a reversal back into the tight trading range. For stop orders on the day, I don't like any of these personally. Maybe you could sell below 4, but maybe 9. But I would personally leave this first leg is not for me personally. I thought 35 made sense, 37, 54 is probably one of the better ones, and you could sell these closes as well. Keep in mind it's technically a bear trend day, or not. It is a bear trend day. It was a small pullback bear trend day, so any bear bar closing near its low was a reasonable short, and you put a stop above the most recent lower high, because if it goes above that lower high, then it's not a bear trend day. So if you're a bear and you see 32, you can just sell below 32 and put a stop up here. That's fine. You can do that. Or you can put it up here above the 12 high until we go below this low. So you could sell here, stop here. We get below here, this bar, and you could add to your position and then put a stop above here or here. So anytime there's a small pullback for a trend day, it's reasonable to sell the market and put your stop at the most recent higher low or lower high. Sorry. On the daily chart, it's a big outside down surprise bar. Was it not a 150 point day? Hold on. 112. Oh, it combined yesterday and today into one. That's weird. Huh. Well, yesterday was just the bear, or was just a half day. So whatever. Regardless of how you want to look at it, a pretty big bear bar. It symbolifies to me the end of this bull leg in the trading range. Maybe we get a bear leg, but this looks like it's going to be the trading range. We might go a little bit lower, a little bit below this low towards 5,000 and then get a bounce. We might go a little bit above this high, maybe even all the way up to 6,000. I would say probably not after this, but we might go a little bit above the all-time high and get a reversal down. We might go a little bit below this low and get a bounce. It's important, I think, for the bears that we closed below the moving average today. So we are going to close this gap with the 814 high. So this is going to be support tomorrow if we do get there. The weekly chart, you can see we're already getting a disappointing bar. However, after 3 straight bull bars, you'd imagine, and the fourth bar is a bear bar, but we didn't trade below the third bar. So you'd imagine there's going to be buyers somewhere below here scaling in. I think the monthly chart is going to trigger above last month's high. So we can see we got within 2 points of last month's high, and then we never got above it. So I do think we're going to get above the August high at some point this month. Or, possibly bulls look to buy a 50% pullback somewhere in here, 5,400. But I still think 5,500 is going to be a magnet, and probably buyers trying to reach this high, the September high, or the August high. Sorry. All right, that is the day.